Hey guys, this is Jay, and in this lesson, I'll be your host, your friend, and your tutor. So, in this session, we are going to continue from our previous lesson on liquidity. And in this section, we'll be discussing inducement liquidity, which is used for expansions, and I'll be showing you guys how to validate your structural liquidity. If you haven't seen the first video, you can please refer to the first video so that you can have a complete understanding of the first two kinds of liquidity, which are the transactional liquidity and the structural liquidity. This is the last type of liquidity, which is the inducement liquidity. And I promise that by the end of this lesson, you will fully understand the three types of liquidity, and then you will know how to apply and identify them on the chart correctly. So guys, if that's something you're interested in, kindly show your support by hitting the like button, subscribe to this channel if you're new, and don't forget to turn on the notification bell for subsequent advanced trading videos. So guys, sit back, relax, and I'll be right back. Welcome back, guys. So let's head straight to the point. We are discussing inducement liquidity. In our previous video, I told us that liquidity simply means money. So you have to learn how to identify or learn how to spot where the liquidity is in order not to become the liquidity. If you can't identify the liquidity, then you will become the liquidity. So we are just going to show us what inducement liquidity is. So this is our swing structure. We expect in our swing structure this is a sweep of the previous high, and then we have a break of structure, which is our transactional liquidity. And in our previous lesson, I told us that when there is a transactional liquidity, or when transactional liquidity has been taken, we are supposed to expect a correctional phase, or a correction into, or a retracement or correction into the premium area. This is a sell model, so we are expecting a correction into the premium area of this swing structure. Right now, let's assume we have our area of value here where we expect to sell from. So I am sorry to let you all know that in the real life trading, it doesn't really look as perfect as this diagram. This is more or less like the basic market structure, where you have your transactional liquidity taken, and when price gets to the premium area for a sell model, you're expecting price to sell to the downside. You're expecting price to sell off from the premium area, which is the POI in your premium area, but it doesn't really work that way. And this is where the knowledge of inducement liquidity becomes very important. Now we can see that this swing structure does not have structural liquidity, and you don't want to take any trade without the presence of structural liquidity, because it is the presence of structural liquidity that validates your POI, or your point of interest, your area of value. With the absence of structural liquidity, you don't want to be seen taking any trade. Okay, this is a simple concept that will save you from unnecessary losses. So instead of us to have price do this, probably come retrace back or sell off from this premium area, because there is no structural liquidity, you will see price will normally take off this low, induce this low, and expand from there. I'm going to show us something more practical on the chart. Okay, so we want to always have our structural liquidity as a confirmation or a form of validation of our POI, which is our point of interest. So if there is no structural liquidity, you want to completely avoid any form of setup, because it might actually set you up, So this is for the sell model. Now for the buy model, it's same thing. You have something like this, your swing structure. Maybe you have okay, let's take it this way, still the same thing, and there is no structural liquidity. We have this sweep of the previous low, we have a break of the recent high, which is our transactional liquidity, and we expect this low to be protected, right? Yes, in our swing structure we expect this low to be protected, and then we expect to have an area of value, maybe a QMR, probably from this area. We expect to have an area of value where price will come and probably retest from this area, but we can see that this swing structure is plain. There's no presence of structural liquidity, and we want to avoid trading this kind of setups where you don't get to see your structural liquidity, because it is your structural liquidity that validates your POI. You can see price will not just come here to probably shift, but price will induce your low, and then price will expand to its original direction after taking you out. So this is everything you need to know about inducement liquidity. If there is no structural liquidity, expect that your low, your protected low, or your area of invalidation will be taken off. Okay, this is not a holy grail form of strategy, but it will save you from taking unnecessary losses, because you should already anticipate that this low will be induced without the presence of a structural liquidity. Okay, in a normal swing structure, what you want to have is this: you want to at least see a structural liquidity, and then you will be sure that indeed price will come and take off. Price will come. This will now be a validation of your POI. So price will come in, retrace into, correct itself into this discount area, and you can confidently expect price to buy off from that zone because of the presence of a structural liquidity. Okay, so I'm going to take few examples on the chart, and we move on to how to validate your structural liquidity. It's a very simple concept, it's a very simple thing. Just just understand it how I just explained it. Okay, let's look at this. Let me cut price. Saw something here. Okay, let's go to the 1 hour time frame. All right, So we can clearly see our swing structure here. We can see a sweep of this low. We can see that our structural liquidity, our transactional liquidity has been taken. Hold on. We can see that our transactional liquidity has been taken, and then we expect this low to be protected because this is a buy model. And when transactional liquidity has been taken, we are expecting price to correct into this discount area. We can either use this QMR or we use this other block, something like this. So now we are expecting price to correct itself into this our POI, but because there is no structural liquidity, we are already anticipating that this our low will be induced. Okay, this our low will be swept because there is no structural liquidity. And let's see how price plays out. Okay, some people might actually be happy that they are already in this trade, and just look at that. This low is supposed to be protected, but because of the absence of structural liquidity, we see that price just whisk out these buyers or people who bought around this zone. And what are we going to expect? We are going to expect an expansion. Okay, price is now going to use this inducement liquidity to expand to its original direction, probably reclaiming the failed order block which price has just done. You see, price has reclaimed this failed order block and it will move to the upside. Let's see the complete play out of the price. This is it. Here we go. Okay, now most traders will be expecting to buy from this POI and see what price did. Price failed, took them off and continued in their expected direction. So we don't want to be seen taking this kind of trade. You always want to have your structural liquidity before you jump on trades like this. Let's look at other examples, then we'll go straight to how to validate your structural liquidity. All right, I think I can see. Okay, this is another one. The score price. Now, this is our swing structure. We can clearly see a sweep of this low. We can see that this other low is our protected low, right? And then we can see a break of structure here, or if we don't want to use that, we can as well use this break of structure. Now this is a clear and a valid swing structure, but we can see that within this swing structure we don't have a structural liquidity. For those of us that don't understand what a structural liquidity is, please kindly go to the previous lesson, which is the first lesson on liquidity, to properly understand what a transactional liquidity is and what a structural liquidity is. I'm going to continue the explanation of structural liquidity and how to validate it in this video. So just sit back and let's continue. So now we'll look for a POI around this area. Let's assume we are using this order block or this QMR. Okay, let's use the QMR here. Now most traders or most uninformed traders will be waiting for price to come into this POI, mitigate it and move to the upside, because there is already a clear break of structure here, which is transactional liquidity has been taken, and then we are expecting a retracement. Now let's see what happened. Price has mitigated, and you see how price failed. And what will happen next? Once price has taken out the traders here, like once price has taken this low, induced this low, price expands to the upside. Price will reclaim the failed order block rather, and expand to the upside. You don't want to be caught in this kind of trap. Okay, for me this is just like a cheap trap. You see, you can just see what's happening. Price has already stopped you out before going in your predicted direction. So we don't want to experience this kind of loss, because it is really unnecessary when you have a good understanding of inducement liquidity. So I'm going to stop here for inducement liquidity. Just go back to your chart and do enough backtesting to know how to identify your inducement liquidity. I bet you it's going to save you from taking so many losses, unnecessary losses. Now, our second point here is how to validate your structural liquidity. It is not enough for us to see our structural liquidity on the charts, but how to validate our structural liquidity is also important for us to know or to learn. In our previous lesson, I showed us what structural liquidity is. A sweep of this low to get our swing structure. We can have something like this. Now we are trying to understand how to validate our structural liquidity. Now this is a sweep of this low, and then we expect this low to be protected. And this is our transactional liquidity, which is also known as our break of structure. And then this is our swing high. Okay, that is going to be our weak high, which is our target. And then I said structural liquidity rather is the last low for a buy model. It is the last low before the protected low, or the last low before the main low. So this is first low, this is second low, and this is last low, and then this is the main low. This is the main low, this is the last low that should be protected. This is liquidity, this is liquidity, this is also liquidity. So we want the last low before the main low. That is where your structural liquidity is. And then what are we expecting price to do? We expect price to retrace itself into a POI around this, below the last low, and then take off from there. Probably we see our POI should be around here. Okay, and price mitigates the POI. With the presence of this structural liquidity, it already validates this POI. So we expect a continuation, because structural liquidity is used for continuation, and then transactional liquidity is used for corrections. Now, how do we validate our structural liquidity? Two ways of validating your structural liquidity. One is by using your Fib tool, which is your Fibonacci retracement tool, which is this. You take it from the low, the last low, or the protected low of your string structure. For a buy model, you take your Fibonacci tool from the protected low of your swing structure to the recent break of structure, or your transactional liquidity. Okay, and then you have to make sure that your last low, your structural liquidity rather, is below the 50% area of your swing structure. Okay, is below the 50% area of your Fib tool, or a little bit above, or exactly on the 50% area, or below the 50% area of your Fib tool in your swing structure. That is how to validate your structural liquidity. Now let me explain better. Now, for instance, you can't have a swing structure. This is your swing structure, and then let me give us another example. This is our structural liquidity, and then I said this is our sweep of the recent low. This low is supposed to be protected, and this is our break of structure, which is our transactional liquidity. Now, how do we validate if this is supposed to be our structural liquidity? Yeah. Now, how do we validate if this structural liquidity is valid or correct? Okay. Now, it is simply done by taking your fib tool, plotting it from the last low or your protected low to the recent break of structure. Your structural liquidity must be inside or a little bit below your 50% area of the fib tool, or above, just a little bit above the 50% area of your fib tool. Okay, a little bit, maybe on top of the 50% line or a little bit above. You can't expect your structural liquidity to be valid if it is far away from the 50% area of your fib tool, something like this. This is invalid. This is invalid because it is not on the 50% line, neither is it below the 50% line or a little bit above the 50% line. You want to avoid setups like this because this your protected low will be induced. Your protected low will be taken off if you trade this kind of structural liquidity. I'm going to show us examples on the chart. Now, another form or the second way to validate your structural liquidity is that your structural liquidity must be V-shaped, or A-shaped. For a sell model, it must be A-shaped. For a buy model, it must be V-shaped. Okay. For a buy model, you need to have an intentional structural liquidity, a very obvious structural liquidity. Okay, and they are always V-shaped. Sometimes you see them in U form, but you don't want to see structural liquidity that looks like line, like you just want to see one line of structural liquidity. Okay, that's everything about structural liquidity. How to validate your structural liquidity, your fib tool. Let me show us another example. Now this is our swing structure. This is the sweep. This is the protected high. This is our transactional liquidity here of our break of structure. And what are we expecting? Let's assume we have our POI around here. We have our POI around there. So we are expecting price to retrace back into this place. So our structural liquidity is the last high before the main high or before your protected high. And let's validate it. This is A-shaped. Are you seeing that it is very intentional and it is very obvious? Okay, you validate it by taking your fib to the last high, okay, to the current break of structure. You can see our structural liquidity above the 50% area. It can either be above the 50% area or on the line or a little bit below it, but it's always better if it's inside the 50% area of your fib tool. So this is how to validate your structural liquidity. Now let's take a few examples from the chart. we can clearly see this. We can clearly see this. This is our swing structure. This is our swing structure. This is a sweep of this low. A sweep of this low. Excuse me. A sweep of this low. This low is supposed to be protected. This is our current break of structure, which is our transactional liquidity, and then this is our structural liquidity. We can clearly, let's validate this structural liquidity. Let's validate our structural liquidity, and then I took this trade. Actually, I used this other block or the QMR there. Now, what makes this swing structure valid? I told us that no matter how far price goes after taking your transactional liquidity, price will definitely correct itself back into the discount area or the premium area of that swing structure. Now, how do we validate this structural liquidity? Take your fib to plot from the last low or your protected low to the recent break of structure. Can we see that our structural liquidity is already below the 50% area of our fib tool, which makes it a valid structural liquidity? Which makes it a valid structural liquidity. And then when you take your fib tool, your stop loss below the protected area, you target your 1 to 3, you're good. Boom. See what price did. See what price did. So it's as simple as ABC. You just need the ability to identify these patterns when you see them and validate them correctly. Okay, and validate them correctly. So guys, if you've gained value so far, kindly show your support by smashing the like button. Subscribe to this channel if you're new, and don't forget to turn on the notification bell for subsequent advanced trading videos. Okay, I think I have something here. Just want to show us more of structural, how to validate your structural liquidity. I'm not seeing examples of. Okay, now we can see a sweep of this low, right? Then this is supposed to be protected. This happens to be our break of structure, and there is another block which is our point of interest here. Okay, and our structural liquidity. Now, how do we validate our structural liquidity? Take your fib tool, plot it from the protected low to the recent break of structure. We can clearly see that our structural liquidity is valid because it is V-shaped. It is V-shaped. You can see it here. You can see that it's V-shaped. It is V-shaped and it is inside the 50% area of our swing structure. So having validates, or after you have validated your structural liquidity, just simply take your fib tool, okay, and then a little bit below your protected area, target 1 to 3, right there, right there, right there. So guys, this is everything you need to know about structural liquidity, how to validate structural liquidity and inducement liquidity. So that will be all for now, guys. Do have a nice time.